welcome to the Brisbane Private Wealth Quarterly Market Update. As usual, I'm joined by Steve Garth. Welcome, Steve.
Yeah, thanks, Rob.
No worries. Interesting quarter. Volatility, significant, but returns still pretty good. Tell us about what sort of happened there.
Yeah, why don't we start by looking at the US, because that really had a bout of volatility. Have a look at the chart here, Rob. The spike in volatility that I'm showing, that's the purple line, it's called the VIX, the Volatility Index. Would you believe that's the third largest spike in history? So the markets really were worried. And you can see corresponding, I've plotted the red line there, is the S&P 500. You can see that dipping down by about 10%. Traders really thought they were going into a recession, just all on the back of some bad job figures that came out. But you can also see that it was very short-lived, and then it seemed to be happy days. And of course, at the end of the quarter, the US Federal Reserve has cut their rates over there by 50 basis points. So the markets finished by hitting new highs almost daily. And you can see there that both the S&P 500 and the high-tech NASDAQ exchange both up over 35% over the previous 12 months. Really strong returns.
Pretty good. We won't knock that back.
You don't knock that back.
If we look at sectors, interesting, banking and mining, particularly here in Australia. Tell us about the last year there, the differences there.
Yeah, Rob, well, I think most people know that 50% of our ASX is made up of banks and miners. And you look at the chart here, you can see this dispersion between the two. For a while there, banks were up 40% for the 12 months and miners were like zero or slightly negative. That's the biggest dispersion, I think, in history between the two. But overall, the ASX 200, that's returned nearly 8% for the quarter, which is sensational. Doesn't quite have that same volatility that the US had. But importantly, it's finished at over 21% for the 12 months period. And you can see right at the end there a little bit of a spike. The miners did lift off the ground just in the last couple of days.
And what's the reason? What was the reason for that?
Yeah, great question. So just in the last couple of days of the quarter, the Chinese central bank, or the Chinese government, announced some policy measures to stimulate their economy, because it's actually been in the doldrums for quite a while, and particularly their property development and real estate sector. Now, Rob, the biggest user of Australia's iron ore is the Chinese property sector. You can see in the chart here that in those last couple of days, the Chinese stock market boosted up by 20%. Not sure that's going to last, but it was that way by the end of the quarter. But you can also see iron ore up by 10%. So in that previous chart where we saw our miners up by 10% in the last few days, all got to do with China and iron ore.
Very good. Fixed interest. Last couple of years been pretty tough. That probably would be an understatement, I'd say. But returns have been fairly solid.
Yeah, that's right. In fact, this is a great example of why you stay disciplined and don't change your portfolio. 2022 was the worst year in bonds in, 40 years. And we all know why. Interest rates went up suddenly and they went up very high, and that, of course, affects bonds. When yields go down, you see the returns of the bond market, which is in the columns I'm plotting there, they go up. And you can see in this last quarter how those yields have gone down. Now, that's not only on the rate cut from the US, it's also on the expectation of future rate cuts in the US. So overall, global bonds over that 12-month period have returned over 9%, which is fantastic. So it's really clawed back a lot of that loss that we saw a couple of years ago. And Aussie bonds too, they're up 7% for the year.
Again, I guess that re-emphasises the fact to stay disciplined and stay diversified. Thank you very much, Steve.
Terrific.
Good quarter, albeit with a fair bit of volatility.
Bit of volatility.
Thank you for tuning in. And as always, if you have any questions, you know where we are. Pick up the phone or shoot us an email. Thanks very much. See you next quarter.